Good morning, good morning. How's everyone doing? Hey, Jam, what's going on? I'm taking it you got snow. ATL, welcome. Welcome to the room. Hey, Donnie, Kevin, what's going on? Shanghai. ATL, I'm assuming you're from Atlanta. Hey, Moran, how are you? Good morning. Nice. My cousin lives by Stone Mountain. I think she's still there. All right. Okay, you've been in the room before? Nice. Good to have you back. Yeah, sometimes life gets in the way of trading. What's going on, Avalon? Welcome to the folks joining us on YouTube. Jiraj, what's going on? Hope your dad's feeling better. Attila, how are you? Okay, well, so we are rolling over the new contract, the old one into the new. You can see the volume in the new one is almost caught up with the old one. So the new one's trading 293K. The old one's trading 310. I'm sure that will catch up with the old one today, and we'll roll into that. Um, so you can see that the contract volume is now split in two contracts. So, but even still, we're getting a decent move. Um, you can see clearly, the new contract is about 50 points higher than the old, which is common. Um, let's get to inventory. So we're going to be trading the new contract today. Hey Radu, what's going on? Bonjour, ça va? Salut. We are long overnight inventory. We opened and did a look below and fail of Friday's low. In the overnight session. So look below and fail. As soon as we took out Friday's low, the short sellers came in gangbusters. And all of that liquidating inventory we're selling up here for profit. Nicely done. And yeah, we'll be looking for a correction lower off the open. Generally, overnight inventory, I'd say, is about 90% long. And so we'll be looking for a move down. And if we take the higher levels here, we'll be looking for 67.88 and 3/4 on the upside. No, it's not a stupid question at all, Avalon. Do I read the tape like traders used to before charts were around? Yes, in equities. Okay, now there's a reason why I don't read the tape in futures. And the reason is in futures trading, all the orders go through the CME price matching algorithm engine or whatever the hell they call it. And so also there is a, excuse me. Why is this thing not? There's also a standard spread. So right now the spread in ES is 48/4 to 50, right? It's always a standard spread. You don't have to watch the tape in ES because it doesn't give you anything. The best way to watch the tape in the ES is to watch a chart. Now, the reason why you watch a tape in stock trading is because stocks trade differently than ES. Stocks have market makers who represent orders, and you can tell by the way a stock trades who is initiating that order. So I can look at the tape and say, okay, there's a seller in this stock, and that seller is based in the US, or are they based offshore? By the way the stock trades, there's something called a give up. So offshore sellers pay market makers to represent the order. Onshore orders don't have to pay the market maker to represent the order. So there's no give up on the backfill. Those are things that you guys don't know what I'm talking about, but they're little subtleties that I can read. I can tell if their price improving, all of that stuff. But it's a skill that you really don't need anymore. You know why? Because the beautiful thing is, if you look at a 1-minute chart or a 30-second chart, you could see the time in sales. It's happening right in front of you. Right? These are just, if you look at this, it's a good question. It's not a stupid question at all. Right? If you look at this, what I'll be looking at that 48 offer. Is the offer moving up or down? Well, right now the offer is consistently moving lower. Now, how could you say that, JJ? Well, look, the offer was here, and then it moved here, and now it's here. See how it was at 48/4 when we started? Now it's at 47/3. So the offer is moving lower. Right? Yeah, so this is a bit of a waste of time. I would suggest that you just watch the offer move lower. Now, what's the practical purpose of that? Right? See, you can always, traders really love to overcomplicate it. So you're watching to see, hold more weight as they keep breaking and hold, determine if price is stalling, PS. Yeah, no. See, this is really simple. I know that the sellers, and check this out. It might be so simple that you won't be able to understand it. The seller was here. They price compete, move down, move down. So what does that mean? If I'm short, say I'm short at 49.5 and my stop is here, I can stay short. And I can go and put some bids in here at 45, 46 and see if I can get a cover because I know the offer is moving lower. See how simple it is? You don't have to look at the tape. You don't have to look at something to hold more weight. See how simple it is. Now that seller who was up here at 48.25, they've moved down here. So it's embarrassingly simple. The seller was here, they moved lower. That means don't go long. They're lowering price. Do you guys understand that concept? It's not a stupid question. It's a great question because now I'm going to save you a lot of time. You don't have to waste your time anymore looking at that. So if you were short 49, 50, 51 stop, come in here and cover some 44s, you make 4 or 5 points. 5 points on one contract is what? $250? Multiply that by 3 contracts, that's a $750 trade You're in, you're out, you're done. Thank you very much. Now, do you really want to overcomplicate that? Overnight inventory is long, it's correcting lower. We trade in the business of the moment. You guys get it? Anybody, light bulbs going off, or is it still too early? Yes? No? I mean, how much more simple do you want it? Hey, Scott, welcome to the room. I take it the stars at night are big and bright deep in the heart of Texas, eh? I miss doing deals in Texas. I love my Texans. Some of the best clients I ever had were from Texas. Yeah, barbecue's pretty damn good too. Yeah, I miss my Texas crew. I worked with a few crews out of Texas. Man, good times. Always a good time. Always made lots of money. And we had fun too. So, Avalon, do you understand what I'm talking about? See how the offer just keeps moving lower and lower and lower? So you don't have to sit and watch the tape. It's so simple and it's visual. Your eye can see it. Now, it might be too simple for you, right? A lot of people love, I used to have a client and he would go, JJ, we need the drama. We need the drama, right? Some people love the drama, right? They love watching the tape and watching this and watching 300 different things. Me, I just want to make some money and go have some barbecue. Right? I'm a simple guy. I like simple. You got a place to short, you got a place to put your stop, because if you lose that seller, means they're going to raise price. Why would you be short 50 if they're going to raise price to 54? Right? Make sense? Yes? No? Anyone? Every time I ask you guys if it makes sense, it's just always crickets. So I guess it doesn't make sense. I hope it does for some of people. Yo, Avalon, you still there? Did you pass out from the answer? I swear to God, you know what I see in my head? Some people ask me questions and then I answer the questions and they disappear. So what I assume is if I give them the answer, they pass out when I give them the answer. They maybe they faint. See how the offer's lifting above this area here? That's why you're gonna cover, because there's a little position here that we went up to sell and we came back to that position every time. There. 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 What's up, Dave? How you doing, brother? Avalon's gone. He's off the stream. All right. So what I'm trying to do, folks, here is I'm trying to teach you guys how to simplify your life. Right? Now, it's not a great business plan for me because I can't charge you for a bunch of crap that you don't need. So it's not the smartest thing for me to do. I should come up with some indicator or like a special time in sales or something like that and sell it for like $1,000 a month. But when it's this simple, it's almost criminal charging people. Why are we stopping at 44? Because there's unfilled buy orders here. The software finds it, stops, and then tries to get people to pay more. If we start price competing, then we'll come and we'll take out that 42 half bid right there, right? So everybody gets that? I hope so. So if we take out 43, all of this candy is going to start falling out into the 39s. I could charge you more. See, you don't have to watch the tape. The chart is the graphical representation of the transactions that are on your time and sales. You guys realize that, right? This is a sales chart. So it's telling us that at 67.50 and 3/4, traders were competing and lowering price to capture the buying because we are in distribution, right? There's VWAP, and we are distributing over VWAP. So when we run out of people to sell it to, we're going to come into this area, and then this area, and then this area. Do you guys see that? Need more coffee? Maybe a little Red Bull? Maybe a latte with a Red Bull chaser? I know it's Monday. Right. The thing is, I'm in the UK and it's like 1 o'clock in the afternoon here, so I've been up for a while. So for folks still waking up, it could be I'm a bit much here because I'm already caffeinated. So if you were shorting, right, if you're shorting and you're a large trader, you'd be using the top of those candles as your out, and these would be your warning levels. So let's look at a trade before the open. So if you're short, say you're short 47 or 48, well, your risk is here. These are your warning levels. So say you're short here, 46, 47. If it takes out the 47s, warning. If it takes out the 48 halves, you can understand. Do you guys understand that if you're short, you can start buying back contracts? Is my microphone working? Yo, folks in the room, a little help here. All right. Just wondering if anyone's listening. Is there a pulse? Okay, we're good. All right, give me this is supposed to be like, you know, this is supposed to be like a conversation. Otherwise, it's me. I could just sit up here and just read Shakespeare and you guys wouldn't even notice, would you? Come on, wake up, wake up. Time to make the donuts, folks. Let's go, let's go. So early. Time to make the donuts, folks. Wake up. All right, if you're not awake, don't trade off the open. Okay? If you guys are kind of like sawing logs, staring at your coffee, don't trade. I'm poking at you. I'm poking at you with a stick. Oh, goodness gracious. Now, what can you tell me from those candles that are happening here? The last 6 or 7 1-minute candles. Bids are holding, right? There you go. Right, we got some buyers. So, if you were short 50, 49, should you have covered at 44? Probably, huh? What's wrong with this box? So we get some short positions in the overnight. Jeez, you guys really... Was there like a sporting event yesterday where you guys all got like pickled? Everyone's hungover? That's where the old overnight high was at 67.33. That's why there's short positions, because everyone's trapped under 67.33. That'll be an area that we'll be looking at on the move down. Overnight point of controls all the way up here. Beautiful distribution. It's Monday, I know. Everyone's hung over from Sunday. You must have been a hell of a party. So the top of the candles are warning levels. Exactly if you're short. Beautiful. There you go, Renew. Right? The top of the candle, that is where, right? The top of the candles are where the sellers initiate. The bottom of the candle is where the sellers stop selling. Now, how do I know this? Because I've sold more stock than you guys can even count that high, right? Because that's all I've done my whole life is sell billions of shares of stock into the U.S. market from offshore institutions. So my job was to be the guy who always sold for his clients no matter what the price and took all the buyers from the other sellers, right? It's okay, Dave, right? Yeah, Raj, I was trying to get people to I want people to get into their heads. Top of the candle is where the seller is. Bottom of the candle is where they stop. So if you're short and you see those bottoms hitting us, right? Boom, 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 boom. You know, because what we want to do is we don't want to talk about stuff that is like that doesn't help you make money, right? So if you were short here and you saw these candles doing this, you should be covering here because then you just gave up your profits. Does that make sense? It may make sense later on if you've woken up and had some coffee, right? That's what I'm trying to do. I'm trying to show you guys where you need to look out for so you can actually take trades that make sense instead of just flapping around aimlessly, right? Slicey man, yes, rollover is upon us, but it's still tradable. It's still tradable. Hey, Bollocks. It's down here, brother. Ah, good question. So when you're a short seller, flex, what does it mean? You've sold something that you don't own. Covering means buying it back. Okay. So on the open, you've got bids at 41 to 42. You've got bids at 36, 37. So if you are shorting, you can see those 42 bids. Look, this is where the shorts are trapped. This is where the buying is. See? This way you can actually have a clue when you're trading, right? You have a clue of where to transact. The supply is now above us. Current price is here and supply is above us. So that means there is downward pressure, not only from the people who are selling, who are long here, but from the people that we've trapped long here. That's why you have competition. So now when the market opens in half a minute here, we're going to see what kind of customers come in, and will the market go higher so we can keep selling product at higher prices, or will we have to go down and put it on sale? Okay? It's really simple, my friends. It's really simple, right? So from reading the room and the audience a bit this morning, I would say that probably maybe 3% of you should be trading, right? If you're feeling dozy, if you're feeling tired, and you're like, oh, I'll just try this trade, and maybe I drank too much cough syrup, don't trade, right? Unless you're clued in, don't trade, okay? Because if you're not awake, you're going to blow money, okay? Look for the sellers at 49, short 46, covered 43, right? I shorted 46, stopped 47, covered 43. Simple trade off the open. Filling those short positions now, you see? Very simple. Trading with the flow of business, trading in the business of the moment, right? So if everyone's selling, you don't want to be buying because you're going to get crushed. As the market comes right back up now, it found a bid. Wait for the next candle to open in 2 seconds. See how the offer is lifting, but it's hitting those areas where we know that there's going to be sellers. So give it a moment. Now watch. As it comes up, right, we caught some suckers, so they're going to come in and buy. And when the market moves up like this, what I'm asking is, where are they going to sell into it? Right? Oh, they sold into it at 50. Right? I'm not going to be comfortable shorting it unless it stays under 47 again. Because if it stays over 47, it could catch buyers and go up to 53. See what it's doing? Watch 47. If it can't get under 47, it's going to move up over the 50s because the position will be underneath us short term. See? When you rewind these charts at night, that's what you want to be looking for. What did I tell you? Look at the candles. Lower, higher low, higher low. There's still a seller at 51, and that's the only thing that is saving the shorts. If you lose that 51 seller, it'll go tickle the 53s, and then it'll make a run for that overnight high. Right? Everybody talks about technical analysis and candlestick reading, but this is the practical way to read candles. There, the seller's back. The seller at 49.5, 50 is there. Watch. What did I tell you? See how it's creeping higher? What I'm trying to do, Flex, is overnight inventory is long. I already took one short, but I'm trying to say don't short it again if it doesn't get under 47 because the sellers are seeing buyers and they're raising price. So I don't have a trade right now because it's not at an edge. I don't like going long at the top, and I'm not shorting here, so I'm waiting. I'm waiting for my business to present itself. See, look. See how we're stopping short right where I drew that white line? If we take out that white line, we'll make a run for the overnight high. The volume is thin, Anne-Marie. Thank you. And here's why. Because we're splitting volume between two contracts, right? 377 on the new one, 382 on the old. That's why the volume's thin. The volume in the new contract should now overtake the old one. So Flex, that's a good question. I don't actually see a trade here for me right now. If you're a gun to your head trader and you're short 50, 51, your stop is at 53. And you're going to go put some buy orders at under 47. If you absolutely have to take a trade. Right now, I would let the large traders work this out. See, there's that 52 and 3/4, 52 half print, but that seller is still there. So if Avalon, if he wakes up from his fainting spell, right, you don't have to watch the tape because you know where the seller is. See how simple it is? And what did I say? If we take out the 53s, we're going to go make a run for that overnight high. If we take out that overnight high, everyone who is short underneath it will race to cover, and the large traders who are long here can dump into it here because they've created buying. No, just watch this, my friend, Radu. Just watch this. I'm giving you guys the simplest way to look at stuff. All you got to do is watch this red line and watch this level. If the red line goes above the level, it means that the sellers have seen buyers and they're raising price. You don't have to look at volume or ticks or any of that stuff. Isn't that wonderful? I've just made your life completely simple. What are you going to do with all that extra time? Right? We in this room, what we want to do at Trading Syndicate is we want to teach you when to do business. Most traders, 99% of traders lose money because they don't know when to take the trade. Because they don't know what's going on. So how can you make money if you don't know what's going on and you're just blindly trading and throwing money in the air? Right? This way, there's nothing to do here. Right? That short I took that short off the open and covered. Now I'm going to let the large traders work this area out, And what I'd love to see is I'd love to see us take out the open and then come back down, and then I could have a short. But right now, they're farting around here, and I would rather let them do that. I know that there's a seller at 54.25, but I don't see a desperate seller yet. Now I'm watching 47. That line here at 47. If we get underneath it, we'll come down into this cost basis. What is so simple about, what's so special about a 1 minute? Well, Radu, because unless you're consistently profitable, if I put a 15-minute chart on the screen, you're not going to be able to trade it worth a damn. A 1 minute time frame suits someone who doesn't know what they're doing. And 90% of you folks don't know what you're doing. That's why I try and teach you on a 1 minute chart so you can make decisions quickly and learn how to train yourselves quickly. If I gave you a 15-minute chart, you have no idea what's going on inside a 15-minute candle. But if I give you a 1 minute chart, you can see how sales are progressing minute by minute. And for people who have no idea how the business works, if you give them a 15-minute chart or a 10-minute chart, they're completely lost as to what's going on inside that candle. So what I'm trying to do is I'm trying to train you to think and react quickly, because a slow trader who is indecisive is a dead trader. Because they have no sense of urgency. A 1 minute candle teaches you quickly how to behave, how to react. So you train yourself to put in your buy order, your stop. When your buy order gets executed, you throw your sell order out based on where the sellers are. Right? So Radu, if you're not consistently profitable, and I put you in front of a 15-minute chart, you have as much, the odds of you being profitable are zero, because you have no idea what's going on. Here I teach you step by step what's going on. As you progress, then you can use a larger chart. But if you watch the session from this morning, I was showing people how to make 10, 15 grand a month using a 1 minute chart. You guys aren't doing anywhere near that, right? So why don't you learn how to make some money first, and then you can expand, right? Learn how not to blow up accounts. Learn a little bit about trading in the business of the moment. You guys don't even know what the business is, right? So not harsh words, but you guys kind of need a little bit of tough love, right? You need to understand, because nobody teaches you guys what's actually going on. They just say trade this, trade that, use this risk, RR this, all this bullshit, right? But you guys have no clue what the hell is going on. So you're just losing money over and over again, but you have no idea why you're losing money. Because you don't understand what's going on. So I'm trying to teach you, this is how business is working. You can see this. Look, what did I say? If they take out the overnight high, they're going to run stops, because everybody has their stops underneath the overnight high. Of course, Howard. You've seen this before. Right? I'm taking it easy on you guys. If this was a real world trading course, but this is, this is retail, and I got to be nice. And I want to be nice, right? What's going on, Jaden? How you doing? So somebody asked, what symbol is this? This is the ES futures, Deborah, and welcome to the stream. So what this is this is a futures contract based on the S&P 500. It is one of the most popular things to trade. The nice thing is there's no PDT rule. There's no borrowing stock to short. So you click to short. You can be in and out, and you'd all be fired. Exactly. All right. So that's good, brother. You're working hard and staying out of trouble. That's always good. So the volume in the new contract now has officially overtaken the volume in the old, Anne Marie. 434,000. Yeah, just a few more. They're competing neck and neck now. All right. So cost basis is all underneath 67.50 to 50, right? So we're taking this and we're taking it and we're going to sell it up here, and the difference is profit. See, very simple. Thanks, Luis. A lot of short covering before because of this contract rollover, Howard. That's what I talked about in the video I posted on Sunday. I spoke about it last week. Right? Contract rollover is generally it's higher. You know, we sold off for a couple of days. It allowed the large traders who were short to pick up some cheap product before we rolled the contract over. Very nice. What is my advice on rollover day? Luis, I did an entire video on that yesterday. I did a whole 15-minute video. So, in a sentence, what's my advice on rollover day? Don't do anything stupid. Right? Trade small, get to know the contract. No, no, you can trade. No, 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 no. You by all means you can trade. Oh. You guys get it? It's like you're driving a new car, you know? You want to maybe not drive so fast. Yeah, there you go. Be a little smart about things, right? Get to know it. Let's not blow up our account on rollover day. See? Simple, simple, simple. They are selling. Everyone who's long under 53 will be selling into these 66s. So the trades I like, now we're in the 8 times cost basis, right? Or 4 times, sorry. So this is the cost basis here. This is 2 times profit. This is 4 times profit. So as a short seller, I want to short up here when it looks above and fails 67.95. Because now we're kind of right in the middle of the zone. So I'll let all the suckers play this out and I'll wait for my next trade. Unless I see something that is completely like so obvious. Like a very, very obvious business transaction. As you could see, every time we got to those stops and we took out those stops, the buyers came in. When we took out that stop and got above 67, that's why you see size here, because that's all short covering. Because everybody was expecting, even myself, I was expecting lower to come into these 66s. But when we did the look below and fail of the Friday low, I went, aha, they're going to try and rail this thing a little higher. That way the dealers who are long here can get rid of some of their product into inventory, and by forcing those shorts to cover, they can sell their product at higher prices. So now if we accept under 66, watch that 66 level. If you're shorting here, I went to short 65 3/4 and I missed that trade, rats. Right, so I'm short 64 and I'm covering at 61 3/4. Not the greatest execution. I was a little slow. Yeah, if it comes back underneath 67.39, yeah, we'll probably come down to VWAP, Louis. Right? These markets are wonderfully mechanical, which means they trade very, very, very precisely because of computerized trading. So the nice thing is, when I was shorting that 64, I should have been short 66. But when I was shorting that 64, I knew once it got down underneath 60 that there would be some buy orders here, because that's where they stopped selling before. You see, here, here, and here. So this is an area that you'd want to cover before. Now let's see where they sell into it. That's what we're always looking to see, where they sell into the product. When the market moves down and comes back up, always think to yourself, where are they going to sell into it? And on the next candle that opens, and that's why we use the 1-minute candle, so you can track the seller in real time. Otherwise, you're looking at all sorts of software that you can't figure out, trying to figure out where the buying and the selling is, and it's showing you right here on the candle where it is. So the seller's here at 65 or 64 and change, right? So the next candle when it opens, if the next candle take out that white line, watch. Right? And you're shorting this area here. Say you're shorting 62, 63. Well, your stop is 64. $64, $65. You could see that there are some buyers at 62. So you're not, you're going to have to be patient and wait for it to break 61. So if you're short 63 against that 65, go put some buy orders in. Get paid. This is how you trade with tactical intelligence. You know where the sellers are. If you lose that seller, why in God's name would you want to be short 62, 63 if that 64 seller lifts all the way up to 67. Does that make sense? Do you guys understand the business reason behind the trade? You're shorting here because there are sellers here and they're helping push price down. No. No. I look at a look above only when it's a level, right? I try not to use that. What I'm trying to explain here, Rishi, is where the seller is. Do you understand what I'm saying right now? I'm trying to explain to you that the sellers are moving their price lower because they're competing. Do you understand that concept? Okay. Focus on that. Focus on that and nothing else. Okay? The sellers are moving price lower to get rid of their product. So if you're short, you're okay. And that's something you don't want to go long when the sellers are lowering price. That's what you need to focus on. Don't focus on anything else. Don't worry about wicks and all of this stuff. Get it? Yeah, the gap is still there, Raj. Not a problem. So if you didn't get a fill at 60, that means there's no supply. So even though you didn't get a fill on that trade, now it gave you, Nathan, it gave you information, right? Keep the questions coming, folks, right? Keep them coming because you need to learn this. Thanks, Anne-Marie. Don't focus on wicks or candle formations or anything else. Just watch the little white line, and when the market gets to that white line, does it get knocked down or does it go above it? If it goes above it, it means the sellers, the people who sell a lot of product, the wholesalers, it means that they're seeing buyers and they're going to raise price. Remember, it's a market, right? People come to a market to sell their goods. This is a sales chart of ES futures, right? Every chart is a sales chart. Now watch this 67.59 because there were buyers underneath there. So we stopped selling. See how we got to 67.59 and the market stopped selling and started moving up again? Everybody see that? Cool. Hey, Christian, what's going on? What's up, Jim? What's up, Jim? Data? Nice. Thanks, Truth. Don't worry, Rishi, you're new. Keep asking questions and keep thinking through the process. Always ask, what's the business that's going on here? Right? Hey, Ralphie, hang on one sec. See, we ran out of sellers, right? So if you were watching and you were paying attention, if you were short 64, 65, 63, and it got down here to 59, and who was it? Nathan went to buy 60 and he couldn't get a fill. So when Nathan went to buy at 60 and he couldn't get any product at 60, the light bulbs in your head should have gone off. Oh, hey, they don't need to sell under 60, so they're going to raise price. Ah, there you go. See? Isn't life more simple when you keep things simple? I just got to find a fancy way of promoting this way of trading. Need to find like a really good-looking girl to stand in front of a Lamborghini and a good-looking guy, and pretend that they made 300 grand in a day, and then everybody will sign up. Doesn't have to be their Lamborghini. Maybe he'll say we cracked the algorithm that created the market, something like that. I was kidnapped by aliens, and they had me program the algorithm. There we go. Oh, hey, listen, you got to have a laugh. Uh, uh, it's okay. You can stand in front of your Saab. Hey, don't knock Saabs. I had a 1978 Saab 99 Turbo. I love that car. It was a great car. Well, it's good to have you back after a few years, ATL. All right. Let's see where we catch a bid. Now, I don't generally like trading in the middle of these zones. I'll scalp. I'll scalp micros and stuff like that just to kind of get to know the contract and get a feel of the order flow. Short 68, out 64. Beautiful. That is beautiful. Beautiful, beautiful, beautiful. Oh, what's next? Okay, what's next? Come on down. Yeah, we're doing some good distribution here. Look at the point of controls here. It's probably going to move up here. And if we can't get any lower, we are going to go try and tickle the Friday high, which is way up here at 67.87 quarter. Mr. One, what contract are you trading, my friend? I'm trading the June contract. You might be trading the March contract. Are you trading 67.18 or 67.68? Ah, you feel more anxious shorting? You should. That means your brain is working, Nathan. This business is built to go long. So shorting is something that's done quickly, and you have to get in and out quick. So Mr. One, you're trading the old contract. Don't worry, brother. Just roll it over. Yeah. So the reason is the market is built and created to get people to go long. You know that, right? Say if I said to you, Nathan, if I told you, hey, Nathan, look, give me $5,000, and in 5 years you're gonna owe $200,000. You'll be like, JJ, what are you on crack? That's a really stupid investment decision. But I said, hey, listen, give me $5,000, and in 5 years you're gonna get back 20 or 30 grand, right? That's that's a better proposition, right? So people buy stock, buy products for capital gains, right? That's why the market is built to go higher. It's not built to go lower, right? Shorting is something that hedgers and speculators, that's what they do. They use that so they can hedge, and market makers short to retail to provide liquidity, right? How do you know when distribution is over? Product gets put on sale. So Ralphie, the cost basis for the overnight inventory is here. Friday's cost basis is here. So do you see the path of the inventory? We're still in distribution, my friend. Because it's a market, right? A market means you take cheap crap and you go sell it at higher price and make money. That's why they call it a market, not a hot tub. Poor high. See, the sellers are competing right there, right? You could still trade distribution. For example, if you were short, say 67.72, you'd put your stop at 73, right? You could even short this. It's okay. If you're a fast trader, you could short here, put your stop here, and go buy it back down here. What is a poor high? A poor high is when you have two half-hour bars that have the exact same top. What does that mean? That means the sellers are competing there. So that means you should short that, put your stop here, and then cover, 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 cover. And the shorts are going to be trapped under 64. So say you're short 71, stop 73, go put some buy orders at 65, 66, go make yourself some money. Very, very simple, right? So if you want to buy a pullback, Ralphie, what you'll do is you'll wait until we can come down and see if we hold 67.60, maybe do a look below and fail of that. Right? There are trades, there's opportunity both ways in this market. There's opportunity both ways. You just have to do the right transaction at the right time. You're welcome, Anne-Marie. Thank you for being with us. I really appreciate your support. There's a method to my madness, and the method is the business. So you see, Ralphie, we took this product here. This is where, pretend we bought a bunch of cheap lawn chairs from China. Then we go and we put them on sale, right? But then we run out of buyers, so we put it on sale a little bit. When we put it on sale, people go, "Oh, a deal," and they come running in to get a bargain. So then we can raise price again. See? But this is happening minute by minute. So we're just tracking it. So say you're long 66, stop 64, 65, sell into the 70s. See? Because what you're doing is you're trading this little distribution. Boom, 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 boom. So you just trade from the outside edge in. Much more simple than going, oh, I need to make 30 points, and is it going to go to 7,000, or is it going to go down underneath 67.30. You don't have to worry about all that. You can make money without, you can be free and clear, right? You can make money without all that hassle. Wouldn't that be nice to make 300 bucks, 500 bucks, and then be done with it? Or even 1,000 bucks, and then you're not killing yourself. The hair's not falling out of your head when you're reading the Wall Street Journal. Anybody get that movie reference? If anybody gets that movie reference, that's Henry Winkler in The Night Shift. Right? He was a broker. He was so stressed out that his hair was falling out of his head when he was reading the Wall Street Journal. So then he got a job as a mortician, much quieter. So, right? This way you can make some money and not get an ulcer. A lot easier. It's a lot easier way to make a living. You always want to wait for the edge, Ralphie, because that's where you get the best deal. So I wouldn't short it unless it comes back under 72, right? Because we got people short under 67. They're all going to cover. The next stop is up here, the top of that beehive from Friday, just under 77. So the market's going to gun for that. Because if we take that out, then traders will have to cover, and the big traders can sell into it the 77, 78, 79s. Yeah, that's okay, right? You're gonna scratch, right? The good thing is, Nathan, that um, you're admitting you're wrong quickly, and that's a beautiful thing. Admitting you're wrong quickly is the way you stay alive in this business. As soon as you're wrong, get the hell out of the trade, right? You know, when in doubt, get the F out. Because that way, you're not standing around like a deer in the headlights waiting while all the money in your trading account is getting vacuumed out, right? So, Ralphie, Wednesday at 11 o'clock Eastern Time, we'll do another execution lab. We're going to do execution labs every Wednesday. I will also be doing a workshop on how to hold trades longer, how to put positions together, right? I'll be doing that this week. You folks tell me what the best day to do that is because I want you guys awake. You guys are going to have to be awake for it. So let me know when you want to do that. It'll be an execution workshop for traders who want to hold trades longer, who want to trade size, who want to build positions, right? But you guys got to tell me when you're going to be awake because it's got to be interactive. Wednesday, I'm doing the Execution 101, Pollux. How's the market making world? You back on a desk yet? What's going on with the 0 and 1 mafia? How is the coin of bitterness this morning? Oh, it's up 1,600 bucks. Need Ethereum to get over that 2318 level. That's a big Ethereum level for me. How's the coin of bitterness? Right at that 75,734. Needs to get over that level. It's cleaning up. It's cleaning up. You know, Bitcoin folks had a big party. Now they need to clean up that market. You got interviews this week? Nice work. Well done, well done, well done. Yeah, so Mr. One, what I'll be doing, I'll be having these webinars, these multiple webinars that we'll be having, they will be in our trading room at thetradingsyndicate.org. They won't be on YouTube. So you can join, you get 3 days for free, and then it's only 19 bucks a month. Come check it out. I'll be looking for bids here under 64, 63 and a half. Yeah, 63 and a half. Do I have? No, we don't. No, but that's a good idea. But what that not be below? But what that not be below short-term inventory? Rishi, I'm a little. You want to just kind of rephrase the question, brother? So the short-term inventory is here, my friend. We are disposing of it here. So as we come down here, that's where the shorts are trapped under 64. So if we take out 64, maybe we can get a little bit of liquidation down. So if we took out 64, we could maybe take out those 56s and come back down to cost basis. You see? At first, it's going to be hard for you to see this, but it's all about just repetition. None of this is rocket science, my friends. It's just repetition. Oh, when I say I'm looking for a bid, I'm not actively buying. No, are you nuts? I'll let everybody else go and buy, let them get stopped out, and then I'll wait to take my trade. You see, in trading, you want to be a greedy bastard, right? You want to let other people go and get knocked out, lose all their money, and then once they get knocked out, it's a lot easier to go and steal their wallet. You know what I mean? A hero is nothing but a sandwich in this business. You never want to be first, right? You want to let other people go first who can't control their emotions. Then once they get killed, then you can step in and take their money. That's how the market works, right? You want to be a little bit cagey. You want to be a little bit sneaky. This is a business where sneaky is very profitable, right? And you want to be long-term greedy. You want to be a little bit greedy today, a little bit tomorrow, a little bit the next day. Yeah, don't worry about that. What you need to worry about, Rishi, is coming up with a business plan, right? How do you develop an intuition? Join us on the webinars. None of this is rocket science. I'm just typing this out so you guys can all see it. There you go. Would I go long below cost basis? You know what a trade I would like, Martin, is I always like the look below and fail of 67.39 and 3/4. You guys are asking good questions in the room, Rishi and Ralphie, right? You're asking good questions. It's just repetition. Once you understand how the business works, we just repeat the same thing. So, for example, if you look at a look below and fail trade, right? Here's a look below and fail trade. So this is a look below and fail. So you go long 67.12.13, put your stop down here, and then you sell a little here, 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 and here. So if you bought, say you bought 15 contracts, and you sold 3, 3, 3, and 3, right? You make a little bit of money. Now, that trade and the look below and fail of a larger level are exactly the same trade. Check it out. So if you did the trade where it's a look below and fail of Friday's low, say you buy 20 or 30 contracts between 76 and 86 and sell them. Does that make sense? That trade and that trade on a 1 minute candle chart and that trade on a half an hour chart are the same trade. Here, you make a couple of grand. Here you make 20, 30, 40, 50,000. But you start here and you work your way up here. Just like when Lewis Hamilton started driving race cars, right? When he was like 6 years old, they didn't put him in a Formula One race car, right? They put him in a go-kart. So learning how to trade on the 1 minute chart is like learning how to ride a bicycle. This is like riding a Grand Prix motorcycle. And you can work your way up. You guys get it? All you got to do is start small and work your way up. You'll be fine. It's a beautiful thing. And that's what we teach you, right? We teach you how to make 50, $100 consistently a day. Then we scale it up, 200, 300, 400, 500, 1,000, right? Now, because you're trading, you're not going to make money every day, right? There are some days, like you're a fisherman. Sometimes you go out, there's no fish. So what do we do when we don't have a good day? We don't burn the boat to the ground, right? We don't sink the boat. So sometimes when you don't make a lot of money, you go into capital preservation mode and you save money so you're not just throwing money away. Make sense? Right? Nice and simple. 67.58. Yeah, there'd be some bids down there. We're 20 points higher right now, but or 15 points higher. But if it comes back down there, I'm always looking for bids. See, the overnight point of control was here at 48. So that's where we're taking that cheap stuff here and we're selling it here. Nice and simple. Nice and simple. There you go, folks. That's pretty much it for me. You know, we take a few trades, make a little bit of money, and then go have a coffee. Right? We want to make this simple for you. You know, we want to teach you how to make money and to do it in a way that is not stressful. You know, you need to practice. So what we do is we teach you first what we do, like for my mentoring students, right? First we teach you how to see a market. Then we teach you the rules of execution, right? The physical steps that you take when you're executing. Then we put those together and it's just repetition. It's like Michael Jordan throwing 1,000 free throws, right? So that repetition is what's going to help you. So when you're, say you get into a trade and it starts going bad, automatically you're getting out of it. You're not freezing, right? Because we train you how to think, right? Yeah, my brother, there are shorts trapped under 63, under 54, under 58. But right now we're distributing, right? You can see the distribution, right? You can see it on the chart. Don't worry if you can't see it because you haven't been shown this before. So this is the accumulation of a position. It was a distribution, but this sideways motion, what it did was it attracted buyers. You see? Let me show you how this works on a candlestick chart. And we'll be doing this. Do you see how there's a position here? Let me just get rid of all of this stuff here. See how there's a position here? We took it and we sold it here. That price stability brought in buyers, and then we were able to distribute at higher prices. And that brought in buyers. So do you see the path of the inventory? And then every time we need to bring buyers in, what do? What do you do when you're in a store and you want to bring in buyers, folks? You put it on sale. Does that make sense? Ralphie, do you get it? So when we liquidate, you'll be looking for bids here. And you'll be looking for bids here. Discount. Yeah. Right? There you go. No, distribution just means trade intelligently, KKP. Don't worry, you'll get it. And I'll be doing classes all week on Ralphie, there's Profile 101 courses, there's Market 101 courses. Go look in the JJ replay recordings, the JJ execution class replays. I've done probably 400 to 500 videos. It's all there. It's all recorded. So trading, you're going to need to do a little bit of homework. You'll probably, people who spent 5 years memorizing candle patterns, it's going to be a little hard for you because I'm going to have to clear out some of the junk in your head. But don't worry, we'll get you there, right? And then people who are programmed on, all this stuff like unfinished business and all that other crap, I might have to do a little programming like you were in a cult. But that's okay. I'll do it, right? We'll clear out all the garbage in your head, right? Remember the paper chase? You come in here with a mind full of mush, and I send you out thinking like a trader, right? We're going to teach you how to do proper business, right? And that's what we do in our room every day. That's what I do in my one-on-one mentoring. It's okay, all right. Some of us, it's tough. It's tough for retail people. Retail people, they're exposed to all of this just nonsense, right? And by the time they come to me, they're like, "Oh my God, this guy told me to do this. This guy told me to do that." It's difficult. But we'll teach you. Don't worry. Okay? We'll teach you. Thanks, everyone. I got a shop vac. I'll vacuum out all the garbage and I'll put in good information. All right? Thanks, everyone. Rishi, I want you to go and read. There's a document that I have. And what you need to do is you need to read this document. It's a very simple document. It's 5 steps on what you should be doing. Right? It's how to use balance zones to trade in 5 easy steps. Read this, my friend. Where are you? Where did he go? And all of you, there you go. You can read it. Have a great afternoon. Have a great morning. Stay out of trouble. Those of you come into the trading syndicate, we will teach you how not to be food. Okay? Remember, every time a retail trader makes money, a market maker gets his wings. Thanks, everyone. See you tomorrow. Bye for now. Trade safe out there.